Let's start. Let's welcome you first to this webinar in the series Leading in Turbulent Times from IMD in Switzerland. Today we're addressing a topic that I think all of us are interested in, and I think it's one of the topics of greatest importance. We're coming out of a healthcare crisis that is still very bad in many regions around the world. And our hearts go out to all of those who suffered or who had loved ones suffer. But what we are about to face is an economic abyss. It's a downturn of unprecedented scale that humankind so far has never experienced. And what we are trying to do today is to think together with you about the corporate strategies that could help navigate in this economic downturn. My name is Patrick Reinmoeller. I'm a professor of strategy and innovation at the IMD, and I'm working today together with my dear colleague Goutam. Goutam, do you want to take over?
Thank you so much, Patrick. I think you made some very important remarks, and this is about how we are going into an abyss, right? It's the worst downturn we've seen in a long time. And so, as we speak to companies, there are lots of questions that are coming up. And so as a strategy professor, Patrick and myself, both of us being in the strategy area, we've been thinking about some of these questions that are most important, and how can we provide companies with some answers? So I'm Goutam Challagalla, professor of strategy and marketing. A very warm welcome from IMD. All of us, including my colleagues, been here for 5 years, just love IMD. And I hope one day we get to again engage both, virtually as well as in person. Cannot wait for those days to come back. But I think everybody recognizes today that we are in quite a recession, right? Some people might call it the worst recession since 1929 and so on. And so the questions that companies are asking, we've put them into 3 basic categories. And the first one is, everybody knows over the next few months what their performance is going to be. That's well known, right? The numbers are there. You know what first quarter is going to be, what the second quarter is going to be. But the real questions are, how do companies perform, once we're starting to come out of this? So that's the first question, right? What percentage of companies succeed? And why do some companies fail, right? What are those numbers? So first, we want to start off with that basic question. How do companies perform? Which is, why do some succeed and what percentage fail? The second question is perhaps even more important. There is so much written today on what to do in a recession. There's advice coming from many, many different angles. Everything from investors to consulting companies and business schools, for example. So we wanted to go into the research to answer a really key question. There will be differences in performance in companies coming out of the recession. But why? Why does that happen? What are the reasons for these differences? And that's very important. As an executive, you want to know why some do better than others. So that's the second key question. And the last question is, because, it is a healthcare crisis that has led to this downturn, there is something unique about the COVID crisis. It's being triggered by a lockdown. So how are companies thinking about strategy in this COVID economy? So those are the 3 key questions we wanted to answer. And of course, what does that mean to you? That's going to be very important in our discussion as we go along and certainly at the end. there's really two key messages that Patrick and I would love for you to take away from this. First, we dug into the research, all the academic research that talks about recession. So we wanted to do this very objectively. It's not, I think, and here's what I'm hearing from one company or the other. We took a comprehensive look at the literature. And one that really stood out in our mind is there are two mindsets that companies can adopt during a recession. And the mindset that a company adopts actually makes a difference in performance. So I want you, Patrick and I, we really want you to think about what's your mindset as you're making decisions, because it does matter in subsequent performance. So that's the first big takeaway for you all. The second message is, combined with this mindset, we are in this very unique lockdown sort of economy right now. And we see that there are four key strategies that companies are adopting to navigate through this crisis, right? And so it's very important, as you look at these four strategies that Patrick will be discussing a little later, are you on the right track? Are you missing out on opportunities? We want you to walk away with that kind of a calibration. So with that, I'm going to turn it back to my colleague Patrick to lead us through the first key question in terms of company performance. Over to you, Patrick.
Great, thank you very much, Goutam. This is absolutely fantastic. I've got a couple of questions on the idea of how visible are the outcomes of the recession actually? Well, we don't know exact numbers in a quarter ahead or in 6 months ahead, but what we know is that it unfortunately doesn't look as good as we want it to look like. But yes, great questions, great interaction already in the chat. Keep it coming. So how do companies perform after such a recession? That is the question that I want to answer. But what I want to impress on you first is how difficult it is to sustain performance over a long period of time. And as Goutam said, we looked at the literature, and the literature gives us some indication in terms of empirical work, also here from the IMD by two colleagues. It's a complex story that you see displayed here. Let me give it to you in a nutshell. How many companies sustain profitable growth over a longer period of time? That's the question. And the answer is, after 10 years, only 5% manage to sustain profitable growth. If we shorten the time period, we see that about 25%, or 1/4, are able to sustain profitable growth. So this is in normal times. So it's really hard for strategists navigating normal times, as you see here. Now, the situation that we are going through obviously is different, and there is some evidence that shows that in a crisis, the churn amongst the Fortune 500s increases rapidly. It spikes. During a crisis, the giants topple off the hill, and that is what we see here. The question that we really want to answer is, how can we avoid being culled by this crisis, and how can we manage to sustain our performance as good as it is possible in this unprecedented times? Now, there is also research with about 4,700 publicly traded companies that looked at how did these firms do across 3 recessions and 3 global recessions. So very similar to what we are experiencing in the coming months ahead. And they found that the majority survives, many die, and a small percentage, 9%, manage to thrive. And it is sad to say that of those that survive, 80% take more than 3 years to get back to their pre-recession performance when it comes to growth and sales and profitability. So barely surviving, and then using 3 years to come back to where they were. So this is something that we want to avoid. Ideally, we want to help you to thrive. And the question then is, what drives this difference? Goutam, over to you.
Sure. If you could
I do.
do the screen sharing so I could now continue. But by the way, in the meantime, while we are sort of doing our back and forth and trying to be as seamless as possible here, just want to say there are some just excellent questions that I've been tracking. Patrick, some of the things that for us to talk about is they're asking, are these mindsets individual constructs or organizational level constructs? Something we're going to talk about right now. Other really interesting questions on, are we really in this deep recession? And I think it's a fair question, and we will give you certainly our perspective. In fact, I intended to close with what this COVID crisis will really be about. That's something that we're going to address. Again, our apologies if we don't get to any questions. As you can imagine, we are trying to do this live at the same time. But let's get into why we see differences in company performance. And, as we mentioned, some of the research says that there are two basic mindsets that companies can have during this period. I believe that we are looking at this at the organizational level. That's what the research looks at. But every organization, don't forget, is a reflection of its leaders. So, the top management are certainly driving that mindset. And in very simple terms, I would say there's two kinds of mindsets. One is what we call as a defense focus or a defense kind of a mindset. So companies that adopt this defense focus their main concerns is preventing bad things from happening. Okay, we've got to survive at any cost. It's very interesting, and this comes, of course, from the psychology literature in terms of how individual thinks. That's where the individual part comes in and the leader part comes in, is companies and leaders that are very focused on this defense mindset. They want to avoid losses. They want to avoid bad things from happening. They feel severe pain when something bad happens to the company. They get less pressure when good things happen, but they get a lot of pain when bad things happen. So then this manifests itself in two key ways in terms of how they make decisions. Okay, first thing is everything that they focused on is don't crash the company. We got to keep it alive and do our best to keep this boat sailing. That's the first thing. In terms of specific actions, it's a lot of cost cutting. Okay, cost cutting and across the board cost cutting becomes the primary way of survival. All right. And there's good reason, right? There's so much written about this. BlackRock, for example, top fund, and they're saying, hey, cash is king. Make sure you prune your costs as quickly as possible and preserve cash, because that will get you through this high recession kind of a risk. So that's one kind of a mindset that operates. And so think about this as a cost focus defense kind of a mindset. Okay. The second, as you might imagine, is the opposite. And this, we are of course painting the extremes here. And these companies are very focused on gains. They view the recession as a time when others are going back. This is the time to go take advantage. they don't want to be left behind. And they say, let's take some risks. There's wonderful opportunities out there while others are pulling back. And so they view the crisis as an opportunity to grow. And their typical action is all around, let's not retrench on investments. In fact, let's double down on our investments. Again, there's a lot of advice out here. Just three pieces that I'm going to share with you, right? Forbes magazine, when a recession comes, don't stop advertising. Do not stop your marketing. A study by a consulting company said that 22% of companies expand on their R&D. They don't cut back. And then, here's a recent article in Financial Times, during a recession, assets can become cheaper to acquire. So go for M&A. And that's sort of the advice out here. So you can see there's two different kinds of advice you get, and not surprising, that's why there are two mindsets. But of course, we are not so naive to think that companies can only adopt one and not the other, and you have to play at the extremes. Very often, companies can be a hybrid of the two, meaning I do some defensive moves, which are cost cutting, and I can do some offense moves, which are around investment. So both can happen. So what does the literature show us? What does research show us in terms of what type of companies do better? What type of mindset do you get better results, right? So here's what we find, okay? As you are probably hypothesizing in your mind that too much cost cutting may not be the best thing, and that offense, if you play some offense, it is probably a good thing. But those that are doing this kinds of investment during a recession do actually a little bit better than those that have a cost focus. So right now you're probably saying, I get that. But what about the hybrid focus? And if you are betting on the hybrid focus, you have bet on the right horse. But there is some nuance and some complexity here, which I'm going to dive into very soon. Those that are hybrid focused do far better than those that are defense focused or offense focused. So those very aggressive companies, they don't do so well. And that's actually a little bit counterintuitive. And they don't do very well because they sometimes underestimate the difficulty of getting customers on board to pay for things that they don't necessarily have the budgets, so they don't do so well. So this combination seems to work well, but based on some of the research we've seen, we're going to call this group the hybrid progressive focus, because it's a very specific combination of cost cutting and growth kind of initiatives that works. And that's what we want to get into, because that's what will give you very specific guidance. Okay, so what are some of these defense moves or cost-cutting type of focus? They fall into two primary buckets. One is companies can reduce employees, right? That's one. We are seeing lots of announcements of those. US unemployment hit 30 million. So obviously you're seeing a lot of employee reduction right there. A second type of defense kind of move is improving operational efficiency. So you're cutting costs by making your processes much more efficient, for example. So that is an operational efficiency. Or you could do both, right? So these are the defense moves. What are the growth or investment kind of moves or the offense kind of moves? There's, again, two primary ones and then the combination. One is more market development, more marketing as well as product development and investing in going into new markets. That's market development as a whole. And the second is about asset investments. You're continuing to invest in your plants. You're continuing to invest in acquiring depressed assets. You find good opportunities for M&A and you do that. Or you could do both, right? So hybrid is some combination of these, And what we are saying is not every combination is going to be good. There are some combinations that are far better than others. And that's what I want to dive into and share the research on this one. Okay. If you do lot of cost cutting, as we saw earlier, right? Cost cutting doesn't work. This defense mindset is not very good when you come in terms of performance. By the way, I did not mention this. This is research looking at performance up to 3 years after the recession. So 3 years into that, right? Those who have done a lot of cost cutting during the recession, even if they do a little bit of offense, right? Some market development, they're doing some marketing investments, they're also going into some markets, they're doing some R&D, they haven't completely cut that. So it's this little bit of offense, but a lot of cost cutting is actually bad. Okay? But what if you did a lot of offense? We said they do better, right? Those who do a lot of offense do somewhat better. But what if you combine it with some cost cutting? Does that work? Is that a better combination? Well, actually, the worst combination is you're doing a lot of offense and you're being positive and you're making the investments. But if you do too much employee reduction, you lose the soul of the company. You lose embedded knowledge. So be really careful when it comes to employee reduction. It's the worst performance here. So where do you get some better performance? What if you did lot of defense, which is lot of cost cutting, and some may be appropriate, some may be extreme, and you also did a lot of offense? Would that combination work out better? And what we find is that actually works pretty well. Okay, so if you can combine these two, you can get pretty good results. But where do you get the best performance? Is there one specific combination that gives the best performance? And the answer is yes. The answer is if you do offense, right, continue to make your investments in market development, assets, but focus on operational efficiency, not employee reduction, not drastic. I just want to let you know, even companies that are in the best mode, they do cut employees. Please, don't get me wrong, right? I mean, sometimes it is necessary and you have to do it. But they do far less compared to the others, especially with the defense mindset. You get the best performance here. Okay, so now I'm going to just fill out the rest. I'm not going to go through them, but I'm going to give you two big messages from this chart. These are the hybrid progressive focus. It's this specific combination. Now, two big messages that I want to deliver coming out of this. The first, if you see, is when you do a lot of employee reduction, in general, it leads to bad or worst performance. So be very thoughtful when you're doing employee reduction, even in a recession. Okay, do not lose the soul and talent and knowledge of the company. Okay, the best performance, if you look, is when you focus on offense and operational efficiency. Operational efficiency, drive it, work hard at it. I was talking to an insurance company and they said, you know, this COVID gave us a chance to relook a lot of these processes we had taken for granted. We've been doing things the same way for 20 years. This gave us a chance to look and truly improve many of those processes. So if you drive operational excellence with this nice combination of offense, based on the liquidity you have and the ability you have, you are likely to come out far stronger out of the crisis than out of this recession than before. So those are sort of my sharings here on the research based on academic research. I'm going to turn it now over to Patrick for this next session.
Thank you very much. If you Thank you very much. That's great. I listened with one ear and I was enjoying the questions with my eyes. So a great set of questions, some into the political sphere of things and comparing countries' performances with each other. That is absolutely fascinating. I'm very happy to continue this conversation offline, but this is focused on corporate strategies in a situation that is quite new to all of us, and therefore let me continue with our emphasis on the COVID economy. What do we mean actually, and what is so different about this economy? And there were a couple of questions related to how much does industry matter, and so it matters a lot. We know what recessions look like. Usually recessions are slowdowns of economic activity that are more or less widespread or more or less severe. You see on the screen 4 snapshots from the National Institute of Economic Research. We see that the 1970 recession very much looks like the 91 recession. So in the orange underlaid segment, you see that there is a marked slowdown of activity. And it basically means a typical recession is a slowdown. It means less of the usual. Less bread is sold, less tickets are purchased, less flights are taken. So it's a slowdown in activity. Now, what we are experiencing in most parts of the world these days is something very different. We call it the lockdown, although that differs a bit according to legislation. What do we mean with this lockdown? Well, we mean that nowadays, where everyone is more or less forced to physically distance themselves from others, there's a severe constraint put on our economy. That means all industries or businesses that are location dependent, providing services in department stores or barber shops or so, they are location dependent services, and they are forced to rethink what their offering is. All those that have physical offerings are forced to make these into digital offerings. So follow the sense of the arrow, and you see that we are, through this lockdown, forced to make a big shift. We are forced to make a big shift to consider digital offerings and location-independent services. Just 2 examples. Hollywood just recently decided that they would do their releases that have been always called theatrical releases or theater releases. They have decided that they move them online because the theaters are closed. So that's a massive shift. Tata Consulting Services has announced that they foresee in the near future that 75% of their employees will not work from the offices. They will work from home. Only 25% will work in the offices. So a big shift for all of us, and in many cases also for real estate. So this has consequences. And the consequence is that we need to think about what our digital focus is going to be going forward. How are we going to make this big shift? And in relation to the mindsets that Goutam has explained, we can develop a framework that we offer you to consider. The digital focus has, again, a bifurcation. It may be putting it a bit into the extreme, but one thrust that we see companies focus on is digital imitation. They're trying to replicate the things that they have been doing. They try to do them right digitally, but basically they're the same things. The other digital focus that we see is the digital imagination, where companies try to figure out what in the COVID economy is actually the right thing to do. And then they do these things, even if they're new, digitally. So this means digital focus is needed to manage this big shift. You have two kinds, imitation and imagination. And let's see what this does to our mindsets. When we put this together to create a little matrix, we have in the vertical axis the mindsets of defense, offense, and we have imagination and imitation. And these then can be conceptualized labels, where we say at the bottom left that firms that are focused on defense and imitate, they replicate their existing processes. They may replicate the processes of competitors, and thereby they defend themselves going into this big shift. Expansion is also possible when now processes are digital. It's much more easy to sell across borders, or it is much more easy to engage in online sales. Before you replicated or before you imitated, you had constraints in terms of physical boundaries. As soon as you are beyond these boundaries through digital imitation, you can expand, and you see in the market that firms are seeking to increase their reach and expand their business. Sustaining is clearly possible, where business continuity requires that firms get improvisational, use their imagination to come up with things, with fixes that make sure that their operations and their businesses are functioning in the way they're supposed to function. And then we have in the top right corner, we have transform. Now, transformation, of course, requires imagination and an offense focus. Let me underlay this with a couple of more examples so that this becomes more practical. Replication, we all know that we move things to the cloud. The things went into the cloud. The things didn't change very much. They just went into the cloud. We moved to the paperless office, very, very similar. Expansion, very often nowadays, is about low-touch economy, where we are not supposed to touch each other, where we're not supposed to touch things that have been touched by others. Companies, through digital imitation, expand their reach by offering solutions to do just that. The cashless society is one example of that. And I recently visited Sweden, and I was surprised how far they are advanced in their cashless society. And so I think that we see some societies catching up there, and organizations will be very keen to expand their businesses as this cashless society is growing. Then sustaining, we have Hire's wonderful case study on digital platform infrastructure, where the business is sustained. It's actually extremely resilient when it comes to shock, because it is distributed but tied together through a digital platform that allows all parts of the organization to flexibly continue under adversity. So then we have the HERE navigation system, where companies like BMW and Mercedes come together to develop a navigation system that helps them to defend their position in the IT, car-related IT sector of the economy. Finally, transform. An offensive focus with a lot of digital imagination. We recently have come to see in the area of telemedicine. where with analytics now services are being performed on a day-to-day basis that have never been considered at such a large scale. And this is a wonderful way of reinventing hospitals and transforming organizations that allow them to have a much wider reach with advanced analytics and the possibility to offer additional services and gain insights that were hitherto impossible to get. And then the last example of Apple and Google getting together, the perennial rivals, Apple and Google, get together. You know, I want to remind you of Steve Jobs threatening thermonuclear war only a while back. Now they are together working to trace COVID infections. And this feat of digital imagination helps them to expand their focus into healthcare, into new areas, while they're also performing some service for society. Now, having said that, I think it's time to hand over to Goutam, who explains how this all makes sense for you.
Excellent. Thank you, Patrick. By the way, just some great questions. We are keeping track of these while each of us is speaking. And while I do this conclusion, and hopefully no more than 5-7 minutes, then that will give us about 15 minutes to address your specific questions. So we're not trying to ignore your questions. There are some fantastic questions that we certainly would love to answer. So what does all of this mean to you? And what I would like to just sort of share here is, and this is something that came up in the chat, right? What is really this crisis? We talked about, 1929, depression, and so on. There's a lot written, on the contraction of employees. But I'll give you one perspective. Okay, I'll give you one perspective on this crisis, and hopefully it will synthesize a few of the things here. We think this crisis is actually a finite crisis. So let me describe what I mean by a finite crisis. In typical recessions, and take the last financial recession for example, the last recession about 10 years ago. We did not know when it may end, right? So we just don't know when the end point is. And most recessions, you just don't know if they're big ones, right? Here, we saw, of course, a very sharp drop. But I think there is an end point to this particular recession, okay? And so that's why I'm calling it a finite recession. And I'll tell you why we believe there is a clear end point here. The first thing is, in the next 12 to 18 months, one of two things are likely to happen. One, we will build as a society a relative high level of herd immunity, right? Could be 50%, 60% of the population slowly gets it as these lockdowns end and we go back to work and, things get back to semi-normal. More of us will contract it slowly. And so that's one possibility, herd immunity. The second possibility is, even if we don't develop enough herd immunity, if you look at all the resources that are going in to medication, to vaccine testing, it's enormous right now, right? I don't necessarily believe all the reports coming out saying, hey, this one's going to work, this Oxford study or this Gilead study is very positive. Those are all fantastic signs, but only the results will tell. When we really do enough testing, we will know. Chances are, in the next 12 to 18 months, we will have a vaccine or herd immunity, which means there is a potential defined endpoint if you buy into this argument. So that's the first thing I want to say, which is quite different from other recessions. So yes, 1929 and all went on for years, right? I mean, the worst years were in the early 30s, and then it took a while. So this is a very different type of a recession. That's our anticipation. The second thing is, if you look at the GDP contractions, obviously in a lockdown and in a sudden lockdown, right? This didn't happen over time. It was boom, right? Italy, Germany, whatever, China first, and then, parts of Asia, and then, going into Europe and US and South Africa, Brazil, wherever, right? It's a sudden lockdown. We obviously are seeing sharp contractions. Other than the tech companies, most others are going to feel a pain, and a few other industries, right? Groceries, etc. So that sharp contract reduction we are seeing in the GDP, normally when you see that kind of a sharp reduction in the GDP, you see the stock markets crashing. We are not seeing that. In fact, today's report said Wall Street had among its best month in like 40 years in terms of regaining, right? So in the previous financial crisis, the market went down 50%. We were really, really concerned. This time, we don't have, of course, there are industries suffering enormously, don't get us wrong. But if there is a divergence between the stock market reaction to the GDP, because there's enough people who believe this is going to be temporary. And one of the, this is one piece of evidence, is not just what's going on in the stock markets, whether it's the FTSE or the DAX or, Dow Jones or NASDAQ, etc. But if you also look at somebody like a Warren Buffett, in the last recession, he made major moves and he plunked down massive capital because he wanted to make sure that the financial system stays alive. He was wheeling and dealing and trying to pump in money into the system. This time, he's sitting back. He says, listen, the long-term view on stocks is still pretty good. And, market was actually overheated before. So maybe this is actually the normal and right correction. So that's the second thing. The third thing is, last time and the last couple of recessions, we were really worried about a financial contagion, right? What will happen when one bank collapses and goes into the next and goes into a third and there's no liquidity? And, we were very concerned about a financial contagion. And what's interesting is the governments reacted very slowly. They really reacted slowly. So just to give you an example, after Bear Stearns collapse last time, it took a full 12 months before the US Federal Reserve and the government started truly doing and acting. Bear Stearns went down, then 4-5 months later, Lehman Brothers went down, and it's only 4-5 months later that the US government started acting. In Europe, it took 2 to 3 years for governments to act because they believed this was a US crisis initially. So it took 2 to 3 years. We are seeing the exact opposite this time. Massive stimulus, right? If you look at what Europe is doing, China to a lesser extent, if you look at US, 2.3 trillion, but European governments have acted remarkably fast. Governments like in India are going to pump in major money into the economy. US is pumping in huge. If you look on average, from a low of about 5-7% of GDP to as high as 15 to 20% of GDP is the stimulus money, Japan being among the high end. So that's why I believe this is a finite crisis. You got to get through the next 1 year. Right? And so this is one person's view. You may completely reject this opinion, but obviously we know that this crisis is going to, has already hit some industries far more, and the consequences will be far greater for some than others, even in the long term, right? Commercial real estate, the TCS example that Patrick gave you. right? There's going to be some long-term movie theaters, right? Some long-term consequences and so on, right? So what this means to you is four things, okay? Two are a summary and two are new points. First is do scenario planning. Okay, because the impact of COVID on different companies and different industries is different, right? So I gave you sort of an overall nutshell of what I think is going to happen in the economy overall, but the impact is different, right? So in normal times, when you know what's going to happen, forecasting is our best friend, right? We may be off. A forecast may be off. Great forecasting may get you within 5-10% and so on. And the more known, the better is our forecast, right? So in normal times, forecasting works. But in this scenario where there's so many unknowns, the exact spike back is not known, you don't know what actions people will take, you don't know when certain things are going to happen, even though I said it's a finite crisis, the impact on some is going to be longer, right? So here's where you need to do scenario planning. There's lots of uncertainties. And so you need to think about what are the different scenarios that might play out, right? Economic impact could be short, could be long on your business, right? And then you might look at, if you're a truly global company with true global supply chains, maybe the second axis is, will we see the globalization and the world order, the rules order, the WTA order stay in place, or will we start seeing fragmentation? You'd be very interested in that if you're a global company, right? So think about what those axes are and most meaningful for your company, and then run those scenarios. So that's the first piece of advice I would give you. The second piece is, there is this elusive balance, right? It's not all cost cutting, it's not all offense, right? This is a summary of the chart that we said. It's not just, hey, play a little offense, play a little defense, and voila, great things are going to happen. It's not as simple as that. It's more complicated. And it's hard to know the perfect balance. So don't get me wrong, right? I mean, this is research based on 4,700 companies, and these are specific findings from 3 recessions, and that's the advice from them. But it's always at the general level, you need to figure out. So, be very careful in cutting employees. They are the heart and soul. Talent is hard to get in good times and will be hard if you cut them now. They'll be hard to get in, when things start recovering. Right? Be careful on employee reduction. I think some governments are doing a fantastic job. For example, what the Danish government is doing, Swiss government, telling companies, keep employees on board, reduce their pay, furlough them temporarily, and there's some great things that governments are actually doing in this time. Some governments more than others. Focus on operational efficiency. Right? I think one of the questions was, yeah, but this is what we would do in normal times anyway. So what's different? Let me tell you one thing. In a recession, the mindset of a company and its leaders often changes. And that's why this advice is important. I might be doing certain things normally, but in a recession, the way I think as a leader and the actions I drive are often different. And that's why these two mindsets are so key. And so play defense selectively, focusing on operational excellence, play offense more comprehensively. Okay, so that's a summary. Third thing is, do not forget that there is imagination and imitation. Imitation will get you only so far. It will protect you today, and that's important. Do that. Do not forget that, because that can drive a lot of operational efficiencies. Some of the examples that Patrick gave, right, are going to drive those operational efficiencies. But and you'll get a little bit of growth from imitation. It's imagination is really where you need to challenge yourself and say, hey, what trends are going to be a little bit more long-term? Right? And it's never, right? In a crisis, people tend to project based on the data they have today. It's never that simple. right? It's rarely that simple. But the question you can ask yourself is, let's say there's somebody who is, 70 years old, was hardly buying groceries online before, very little, and now they've started to get used to it. Are they going to go and completely buy groceries online when things open up? Chances are no. But if you have a very cold day and it is raining, and now this person has got used to doing some of that grocery shopping online, chances are they're going to do that online. So the shift, what you want to think about is what behaviors, under what context will this behavior become more permanent, and under what context is it going to be more temporary? And that's why you need to be thinking not just of imitation, but of imagination. This is the time to rethink some of those fundamentals. Okay, last piece is something we didn't talk about, and I just want to leave you here with one parting thought before we get to the questions. It's your time to rise. Right? We are seeing some companies doing some truly amazing things. Companies in France were among the first to start producing sanitizers and so on, right? This is luxury companies doing that. Some, companies in Germany have done that. Companies across the globe have done some amazing things, right? So do well by doing good. I think that goes without saying. Right, this is a humanitarian crisis, and we should never lose sight of that. But do avoid dumb scrutiny. Some companies are making some absolutely stupid mistakes. It's unforgivable. Okay, I'm going to leave you with two of these because you got to avoid the dumb mistakes, right? So here are two of them. Disney has furloughed 100,000 employees. I can get that. I get that, right? Your parks are closed. You can't be paying everybody. In fact, government is paying for some of them. So I totally get that, right? To an extent. But you've let go of 100,000 employees. You've made no change to your executive compensation. The executives at top are making, on average, 910 times more than the average employee. 910, for God's sake. And you've made no change to your executive compensation. That is just dumb. When people are suffering and you behave that way, that is just bad scrutiny. Even Abigail Disney, one of the major shareholders and granddaughter of the founder, said this is unforgivable what some of these executives are doing, right? I'll give you a second example. A lot of governments have said force majeure. You do not need to pay rents for maybe 2 or 3 months. So Adidas wanted to take advantage of this, right? And completely legally, they're absolutely right in saying, hey, listen, our stores are shut down in the shopping center. We're not going to pay rent for 3 months. Massive backlash the very next day from the finance minister and a whole bunch of ministers and big powers out of Germany. Why? Very simple. Adidas was planning to do $1 billion stock buyback. And they're making, more than 2 billion in profits. Many of the store owners are actually suffering, right? The malls, etc., are suffering. You can't make decisions in general today in a social media, in a world where we have access to so much information. You cannot make decisions just based on strategy and your immediate welfare. You must look at what we call as non-market forces, right? Sustainability is one of those non-market things. You got to look at both in combination. So do well by doing good, avoid dumb scrutiny, right? So this is sort of our overall presentation. Didn't realize that we are just about 5 minutes left. Patrick, can you join me and maybe we will collectively try and answer 2 or 3 of the questions. It's so funny. In a COVID world, we were doing our social distancing. We were in different rooms, but here's Patrick. Hey. And by the way, one of the things that Patrick and I will be happy to do is we'll look at the comments and take 3 or 4 or 5 or 10 and then try to compile an email and see if we can get them out because we took a lot longer than we had anticipated. It's just the Indians cannot stop talking when they have an audience, or my apology for that.
Absolutely no problem. It's good to see you. Thanks everyone for these wonderful questions. Very engaging. The chat was just one stream and fantastic questions. I really think that we need some time to answer at least the clusters of them. If you have specific questions, I responded already to some of those. Send us an email. We're very happy to engage further on this. It's absolutely a pleasure to have spent the last hour with you, and I think it's a topic that will keep us busy for some while, whether it is finite or takes longer than this.
Thank you all. And again, sorry, we ran out of time to answer the questions. Is there one or two we could answer, Patrick? Is there a question that comes to mind? Is there a question?
Will governments be more involved?
I think you're already starting to see that, prior to COVID, supply chains started bifurcating, right? You started seeing the world order slightly changing and supply chains bifurcating. I think post-COVID, you will see enormous government interventions, enormous to a degree, to, I think, rejigger some of the supply chains, especially when it comes to essentials. By the way, essentials will not be only healthcare related products, which we are going through right now, whether it's ventilators or masks, but I think other things that will be very important for an economy to run as usual, I think we will.
I think governments will become more involved, and the big question for us is that a good thing or is that a bad thing?
Exactly.
And in healthcare emergencies, maybe there's more of a good thing. But when it comes to developing new exciting products that consumers around the world will love, I would have my doubts. What I think can be said is firms need to emphasize their approach to fostering the common good. We have a colleague who did a seminar on sustainability and the impact of COVID on the environment. I think that firms right now need to show their communities, their stakeholders, including the local governments, that they are in for the common good. If they are not able to make that sufficiently clear, they're in for more government intervention.
So with that, I think, please, we will not ignore your questions. We'll compile them and get back, so, maybe 8, 10 questions. We'll cluster them. We will answer them. A huge thanks from Patrick and me. Yes, and stay safe and cheers, Patrick.
That was it. Thank you very much.
Fantastic. Thank you.